What's up everyone, welcome to another market update video. Today we're going to keep it quick. We're just going to do Bitcoin and Ethereum, and then possibly later during the week I will come up with another market update video just for altcoins. If there's any altcoins that you'd like to see me do, drop it in the comment section below, but otherwise let's get into it. So firstly on Bitcoin, let's just say that whatever we talked about last week is happening exactly to a T. Remember how last week I said that Bitcoin was looking bearish, and the main reason for that is because you have gotten a confirmed sort of change of character to the downside. And so when that happens, you start to go into bearish order flow where, every buy-side liquidity sweep or buy-side liquidity fill, where in this case you have just filled in the bearish order block right there on the daily chart, notice how you immediately get rejected. So these order blocks basically provide you with high probability areas to short from during a downtrend, or in the case of a bullish side of things, they provide you with high probability areas to go long from. But here is the situation at the moment. So last week we talked about a bearish situation where price comes down here, retraces back into the order block, and then the next move will form a new low. So in this case, it will very likely head to anywhere between the previous level I marked out was 27. So that will be the target for this move. But otherwise, the bullish scenario would be on the daily chart, you get a break above this previous high, right? With a candle body close above this previous high right here at 30,050. We clearly did not get that happening. And at the moment, it is looking like the bearish scenario is playing out. But if you do get a confirmed daily close above there, then the next move, you look for basically a bullish order block right here to form a support. And then that will lead to forming new highs. So part of your job as a trader is not to predict, is to read and react to what the market's telling you in an objective fashion. If the market is telling you A, don't try to come up with a reason to say that it might be B. So at the moment, unfortunately, market is looking pretty bearish, and it's probably likely to head lower. Now, I was one of those guys. In fact, I was very confident that Bitcoin was going to hit 35K by the end of summer before any type of significant retracement, just because that is a CME futures gap. Now, there is still a chance that we might be able to hit that. So don't lose hope just yet, but I do want to paint the complete picture. I want to explain each scenario so that you are at least prepared for anything that might happen, and so that you can profit off of, anything that might happen. So first things first, let's talk about the bullish scenario that will support 35K by the end of summer. So end of summer is probably, right about 30 days. Some could even say 45 days. So all of this has to happen within like a 30-day period, which is pretty much unlikely. Basically, on the daily chart, if you look, if you were to zoom out, right, you go from this low to this high, this low, this high, sort of like this low. You could even say, let me draw it another way. 1, 2, 3, 4, 5, 6, 7. Right? So that's how market structure is looking like on a larger time scale. You could even simplify it and say just like this, like this, like that, like that, like that. So at the moment, the market structure is still pretty bullish, which means at any point here, even if it were to come to 27K, you can see that this is just a retrace before a higher high. That is highly likely to happen. But that is a scenario that could happen, so do not rule that out. The only thing is it going to happen before the end of summer? Highly unlikely, just because we have about 30 days before the end of summer. It's probably just going to take 3 weeks just to get here. Maybe another couple weeks of consolidation just to build up a range before you get the initial, initiation, and then mitigation before continuation. So most likely, if the market still remains bullish, then the timeline for that to happen, for 35K to be hit, more likely it's going to be within 2.5 to maybe 3 months. So these retracement phases are always very slow. If you look at just any trend, right, I'm going to just use this one as an example, or even just this one. Look at the down moves, right? The volatile periods account for the majority of the price movements, but they do not account for very much time at all. And it is similar in the bullish case, right? You get volatility and then you get low volatility. Markets always move from periods of low volatility to high volatility, and vice versa. Once you get high volatility, you get low volatility for pretty much this entire time, and then bam again. So this is that period of low volatility. So it might take 2 months for this to happen, but it might only take, a couple of weeks for this to happen. That's what you need to understand about the markets and the timing of markets. Now we come to the bearish scenario. What do we have to keep in mind? Well, essentially, I've already drew it out here. Price is currently in a range from this low to this high here, and you can see that most of the price action tends to be just focused within this range. And this here is called a range deviation, where you take out one of the areas, you take out one of the extremes of the range, and now statistically speaking, 80% of the time, once you get range deviation, you tend to deviate back to the opposite side. And liquidity concepts, which is something that you will learn in Trading Accelerator, which is a free trading course that I just launched, that'll teach you everything that I talk about in my videos, how to predict where price is going to go next, how to read retracement levels, how to read market structure, what is liquidity concepts. But most importantly, of course, will get you from where you are at right now to being profitable within 30 days. I have personally spent upwards of 5 to 6 figures of my own money, either through trading losses or just paying someone to teach me in order to learn the lessons that I've learned. And right now I'm giving them all away for free. Very soon, I'm going to do another intake for the free course because in order to maintain quality, we are controlling the quantity. If you are interested in the free course, which some people are already raving about, even though it's only been open for just under 48 hours, make sure you sign up to the waitlist in the link in the description box below. Otherwise, going back to the video, liquidity concepts, which is something you'll learn there, is basically just backing up this statement where you have liquidity over there, which the market makers will target. Basically, anybody that went long at any point here, right? As long as they didn't get stopped out, they would have gotten a free ride all the way to the range highs. And right now, and here's the thing that you need to understand about retail traders. They are retail traders for a reason. They do not take profit when the profit is in front of them. That's why they stay retail traders. That's why they stay dumb money. So you can bet that there are a bunch of people who are still greedy and holding on to their position, thinking that it's going to go to 35k in one fell swoop. So if this is indeed the bearish scenario where we get range deviation and we go to the opposite side of the range, then, well, obviously you're just going to stop them out before moving to 35. So that is the bearish and bullish scenario for Bitcoin. Either way, at the moment, still bearish. I would still lean towards shorting till you get a confirmed candle body close. Now, previously it was at 30k, but now that level still remains at 30,050. So if you do get a candle body close above this wick, then you can start looking for, just like this scenario, a retracement into some area value before you get continuation and a formation of a new high. In that case, then it's going to be targeting here at 31,800. That is going to be your TP number 1 for a second leg. So probably like that, you consolidate a bit, maybe retrace a bit, and then second leg to 35k. That is the plan for Bitcoin. If you enjoy this kind of straightforward analysis that actually explains to you why I'm expecting the markets to move in what way, then drop a like and most importantly, subscribe to this channel. But otherwise, now we get into Ethereum. Now Ethereum, well, not much has changed since last week. Pretty much the only thing we've got is a liquidity sweep below this level. At the moment, there is still hope that Ethereum could continue going higher because basically in buy programs, meaning in bullish market structure or bullish order flow, sell-side liquidity sweeps provide the markets with enough fuel to create new highs. What do I mean by that? Oh, you have this high here, you have this low here. Once you get this high here, notice how this wick sweeps the liquidity that is below that body. The moment you sweep it, immediately you form a new high. And similarly, in a sell program, buy-side liquidity sweeps provide you with an opportunity to form new lows. For example, over here, you sweep the high, that propels the market to form a new low. And similarly, well, overall, this is still a buy program, so once you've got this sell-side liquidity sweep, bam, immediately new highs. And the more significant the liquidity sweep, the more significant that up move is going to be. And basically, Ethereum is still at that space where, it's not confirmed to be bearish yet, but it's also not confirmed to be bullish yet. It's basically in no man's land, and this is the exact moment where I would refrain from trading. Now, because here's the thing, most of the money, believe it or not, is made in the extremes. It's not made in the middle where everything is choppy and you don't know if it's going up or you don't know if it's going down. Think of it this way, if I take a trade at the low and I take profit at the high, that is like, let's say that's 2 units of profit, right? Compared to if I take a trade in the middle and I take it at the high, that's 1 unit, maybe even less. And if I take a trade here and I take it at low, that's 1 unit. Just by selecting your trades better, you're pretty much guaranteed to make double the money while losing a lot less trades. So in the middle here is sort of like the chop zone right now, at least right now, because you haven't gotten any candle body closes beneath this level, it indicates that there is not yet a willingness for the market to move lower yet. But at the same time, I do think that because Bitcoin is leaning towards the bearish side, Ethereum is going to lean towards the bearish side as well. So here is the plan for Ethereum. So I already drew it out, a bullish scenario and a bearish scenario. It's pretty much just similar to Bitcoin, where you get a confirmed candle body close. In this case though, for Ethereum, it would be here at 1880. So that's the update from last week. So if you get a confirmed candle body close above this high, then, well, then you can start looking for a retrace. But otherwise, the bearish plan in this case would be already what we're sort of getting at the moment, where break low and then you look for a retracement. In this case, I think the retracement is going to be around that block there, but we are going to zoom in just to see if we are missing anything. Well, actually, if you zoom in, you can notice that on the 4-hourly chart, price has already actually filled in the gap, meaning this candle here has already filled in, the retracement. Now, is there a likelihood that price is going to retrace yet another time? Maybe. But in this case, what I would personally pay attention to is either just shorting from this block here between 1835 to 1846. This is sort of already the short zone. It's either like this block, or price is going to do what? It's going to sweep liquidity. Buy-side liquidity sweeps during a sell program leads to new lows. So that is what I would be personally looking out for on Ethereum. But otherwise, this provides another opportunity as well. But for now, that is the plan for Ethereum. And let's talk about targets. There is no reasons for you to be taking trades if you don't even have a target. It's almost like you getting on a plane, buying a ticket to nowhere, but still getting on a plane. Like, there is no point in you getting on a plane in the first place. So the first minor target for Ethereum is going to be here on the bearish side of things. That's going to be TP1 at about 1787 or like 1790. This is just going to be a temporary pit stop. I do expect the ultimate, not really ultimate, but like this would be the more significant one at 1730. If I were to TP, I would probably do it here rather than here. This is only for the people that feels like, hey, you're a short-term trader. You don't really want to catch the full move. You just want to take a bit of profit. You just want to catch this move, right? A higher probability, but a shorter move. So that is number one. And number two is going to be at the range low here at 1650. So if you look at Ethereum, right, based off of this lens here, you can see that Ethereum has mostly been trading between these two ranges. And one of the reasons why I was so bullish on Ethereum is because, range low has sort of already been taken out, and you had bullish market structure with sort of a retracement. But hopefully Bitcoin doesn't just dump straight down. That will give Ethereum an opportunity to head over to range highs, which is at 2120. But hey, on the bearish side of things, range low, easy target, easy. But I would even go so far as to say 1600 is the target for a bearish side, because most of the time you don't necessarily just go for range low, right? Once you sweep out liquidity, there are going to be a lot of market orders that get put into the market, like just at the same time. So that will lead the market to go just a tiny bit lower to our TP2. That is the plan on Ethereum. Anything further than that, we're going to be talking about it next week, but I guess this would be sort of a long-term bear target for Ethereum. I mean, not even long-term, probably just mid-term. Long-term would probably be all the way down here at 1100. So yeah, let's say that this is a mid-term bear target. Because honestly, that's all it is. And as for the bull target, it is at range highs at 2120. The mid-term target would be, of course, here at around the BTC CME futures gap, which is at about 2530. So that is the plan on Ethereum. Now, if you want to get access to a trading education that will absolutely change the way you trade for absolutely free, sign up to the link in the description box below. I promise you will not be disappointed. There is going to be no BS, no fluff. It is just pure value designed to help you. Until then, I will see you in the next video. Bye-bye.